Welcome to Dollars and Cents with Freedman Financial, the home for financial advice in a language you can understand. Created by Marc Freedman of Freedman Financial, he and his team of certified financial planner professionals will discuss timely topics that help individuals and families make smart financial decisions. And now, get ready for this week's edition of Dollars and Cents with Freedman Financial.
Welcome back to another edition of Dollars and Cents with Freedman Financial. I'm Marion Gilman.
And I'm Christian Karcher.
So, Christian, good morning. It's nice summer weather today, huh?
It sure is. The heat is kind of dissipated a little bit, so
Yeah.
we're kind of in the actually comfortable and can enjoy the outside zone, which is wonderful for this week.
Absolutely. But, we are in New England, so that means that, let's say, a week and a half ago, we had 100-degree weather that broke all records. And then we had 65-degree weather and rain, pouring rain. So, you sort of don't know how to even dress in the morning. But all is well. We're inside, so it's okay.
Of all the problems to have,
Exactly.
The weather is not one I'm going to complain too much about.
That's right. That's right. So we're on our podcast, we talk about financial advice in a language you can understand. And one of the things that we do at Freedman Financial is we always take a holistic view of our client's entire financial picture. We don't just look at investments because investments are a very small piece of the pie. And everything else that you have and that you do fits into this pie in some way, shape, or form. Many clients come to us when they are approaching retirement and they bring all of their assorted statements from, let's say, 401ks and bank accounts and IRAs and money that they've saved outside of IRAs and life insurance and so many different aspects, annuities if they have it. And we accumulate all of that. We create net worth statements so you can see it all in one place. And it gives us a better understanding of who the client is. And it also gives the clients a way to see everything in one place. And many people have a tendency to say, well, you know what? This is the way I've always done it. It's worked so far. I'm just going to keep on doing it this way. And how do we look at it, Christian?
Yeah, well, I think it's really easy in life you start setting up your contributions. They're kind of automatic.
Right.
Life is going on. And to look at your own financial plan and to make changes, we know it's a very complicated, interconnected thing. So you start making a decision one place, it turns into this. And so it becomes this big kind of burden to make any changes to your financial life.
And you have to figure out how to actually get into the website and make that change.
Right. It is. There is a significant hurdle there. And so
Right.
when we have people who are coming to us and they're approaching retirement saying, okay, now's the time I'm going to get serious, very often many of their financial habits, their savings, what they have, where the accounts are, have been consistent for 10, 20 years. And it's really always fascinating to say, okay, this account, this insurance, when you bought it, what was your thought process behind it? And clearly, you're not going to remember what you were thinking 20 years ago, which means, well, you've accumulated these assets. You might have been a great saver. You don't actually have a plan for what the purpose of each of those accounts is. And we love to take a look at that and figure out, okay, what is the plan? What are you trying to accomplish? And which of these things that you've done is best positioned to help you in accomplishing those?
Absolutely. So in your mind, and you've been told over and over and over again that you need to save for retirement. So that's what you did. Life insurance. Now we see a lot of life insurance come into our office. Why did you buy life insurance? And we'll ask people, why did you buy this? And they'll say, oh, to protect the family. The question now is, why are you keeping this? Mm-hmm. So, what made sense 20, 30 years ago, you want to take a very hard look at that and say, why am I keeping this intact? Why am I still paying this? Is this the right thing to do? What is the purpose of this now? And is this going to contribute to my retirement? And so how do we approach life insurance in particular, Christian?
Right. And there's a few different
Yes.
categories we got to be thinking about here.
Right.
Number one is term insurance. So that's
Right.
you buy life insurance for a specific set of time.
Right.
Very often we see people who they'll have kids, they'll buy a house, they'll buy some term insurance.
Typically 20-year term. I think
Right.
that's what we see the most.
Yeah, and so they bought it around age 30, age 40.
Right.
It's really when they were buying it, they were thinking, okay, I want to make sure that there's enough money to pay off the mortgage for my spouse if I die prematurely, make sure my kids can go to college if I die
Right.
prematurely. But what we find is as you get into those upper years, well, the mortgage is getting paid down, the kids
Yep.
might be out of the house.
And now you saved a lot too in your
And now
401k.
That's right. And now your spouse could continue on the lifestyle because you've been accumulating money. Back when you bought it, you probably didn't have nearly as much saved for
Right.
retirement.
Right.
And so there becomes a different calculus. Now, term insurance, we typically tell people to keep it through the term because on a 20-year term policy, they take that when the insurance companies are calculating what you're going to pay, they take what it would cost for that whole 20 years and then divide it by 20. However, you actually are much more risky as a 60-year-old with that term insurance than you were at age 30.
Think about that. I mean, if you went to buy a 20-year $1 million term policy at 30, it might cost you probably what, $500 a year or $1,000
depending on your
a
health.
year,
Yeah.
something. Yeah, depending on your health. But if you went to buy that at 60, it's a lot more likely that you're going to die between 60 and 80 than that you're going to die between 30 and 50. So they're going to charge you a lot more for that insurance at 60. Do you need that insurance?
Right.
That's the question.
And that's the kind of the cost benefit weighing. Typically, we tell people to kind of ride out their terms, but in some cases, it doesn't even make sense to continue to pay it.
It depends how much you're paying for a premium every month or year, however you pay it.
Right, and it also depends on your own health. If you have a significant
Correct.
health issue that has made you uninsurable, maintaining that insurance might be a little bit more beneficial than
Yeah.
if you are a perfectly healthy 60-year-old.
And you particularly if you do have insurance in place and you're still working and dependent upon that income, it makes sense to keep that policy in place as well, as long as it's reasonably priced while you continue to work.
Right. And one of the other insurances that people will buy are what
Yeah.
are called whole life or universal life. These are the permanent life insurances.
So why would somebody buy a permanent life insurance policy?
Well, and so there's many reasons. I love asking that question when we see a permanent life insurance policy.
And by the way, most people that we ask, they're not really sure why they bought a permanent
Right.
life
They
insurance
can't remember, but
policy.
they usually can remember a few of the key selling points that someone
Right.
sold them the insurance policy on, which
Sure.
is, okay, you're going to have life insurance for your whole life. The same thing we talked about, we're protecting kids, family,
Right.
which you can do with term insurance. So that's
Much-
not really why you chose.
So by the way, permanent life insurance is much more costly
That's right.
than term life insurance. Typically, when you're 30 years old, you need a lot of life insurance because if you have a family that you're protecting, you need a lot of life insurance for a limited amount of time. So
Right.
you buy the cheap stuff, and you can't afford a lot of money either to pay a lot of money.
Right.
Whereas permanent life insurance, that's not for somebody who needs a lot of life insurance for a limited amount of time.
Right. That is for your whole life. Sometimes people will sell it as an investment vehicle, which it is not, but people will sell it that way. And the other thing we hear when people say, when we bought it, we thought maybe we could use, there's a cash value associated. So your
Right.
premiums go in, they pay insurance, but they also accumulate a value. And they say, oh, they told us we could borrow against it, or maybe we could take the money out.
And you can.
And you can, but they're not really clear on the mechanics. And you ask, have you ever used it in that way? And they say, no.
Right.
So very often, no one's ever used it in the way that it was even sold to them for. But what we think about is, okay, again, we analyze, do you need life insurance?
Right. And why would you need life insurance? What are some of the reasons you might need life insurance in your 60s, say?
In your 60s and beyond, if you have a significant pension without a survivorship benefit, so that's a very good purpose. So if you're a teacher and you select that option A, where you get just the life-only pension and your spouse is not protected, holding some life insurance can be useful because it protects your spouse if you are to die early in retirement.
And if you have a good, if you speak to a good financial planner, they can do an analysis for you when you're evaluating a pension option, life only, versus buying some life insurance as well.
That's right. And one of the other things we think about is, okay, well, maybe the need for life insurance has passed. Kids are through college, they're not dependent. But there's now new questions that you have in your 60s and 70s. You might be thinking about, oh, how am I going to protect myself against long-term care insurance costs? Yeah. And there are a lot of different options. And those life insurance policies can be ported into new types of policies that can provide things like a long-term care benefit or even guaranteed income throughout retirement. So there are different options. Sometimes they don't make sense, sometimes they do. But it's worth taking a look at instead of just saying, you know, I've always paid the premium on this life insurance policy, I'm just going to keep doing it.
And the other possibility as well, as you get older and let's say you have this life insurance in existence, it could be that you no longer have to pay the premium, and it will continue to stay in existence for you for many more years. How does that work, Christian?
Yeah, so this one's a little bit more complicated, so I'm not going to try to explain
Not
all
details,
of the weeds.
But just the thought process behind it.
But very often, people will be paying this into retirement, and we say, you know, this was an accumulation vehicle for you. You were using this to save. You are now in retirement, you're spending. So what you can do is the cash value that accumulates.
Again, it built up over the years.
That's right.
Because it got invested in, you know, either a portfolio or a guaranteed income contract or something like that, depending upon the type of policy.
That's right.
So
and it probably earned some interest, and it continues to earn interest, which in the life insurance world, they call a dividend.
Yep.
And so you can actually say if the interest is enough to pay your premium each year, you can contact the life insurance company, fill out a form, check a couple boxes, and have that growth, that dividend interest, pay the premium each year. And that way you don't have to pay their premium yourself. It's less out of pocket for you. You continue to maintain the insurance. The death benefit and cash value just won't grow quite as significantly as it did while you were in your accumulation phase.
Right.
So there's a lot of different options. And we like to go through those options with people because very often you don't really, I mean, a permanent life insurance policy is not something most people understand.
Right.
And
very true. I mean, virtually very few people understand.
And even fewer people build it into their financial plan. They say this is just going to be a thing that happens on the side.
And you know what? A lot of people will look at it too. And if we suggest maybe you don't need that insurance, maybe you can take that cash value and use it now, or maybe you can do something else with it. A lot of people will tell us they need it to bury them, or they bought it so that their kids would have money to bury them. And is that a great reason to keep life insurance, Christian?
Not anymore. Back when life insurance was one of those few vehicles you could use to save, and technology wasn't where it is today. Today, you go to the funeral home and they say, okay, who's giving me a credit card to pay for the funeral?
Right.
And one of the heirs is going to put down the credit card and they'll figure it out later.
Right.
It used to be that the funeral home would have an insurance policy, you would sign it over to them, and then they would use that. That is not, in our modern world, that is not how things go anymore. You're going to pay with a credit card up front. The life insurance will eventually reimburse you. Frankly, life insurance is much slower to reimburse.
Yeah, than many other.
I mean, the funeral home probably won't even get you the death certificate
right,
until they get paid something.
That's right.
Which is required for the life insurance. So right at this point, don't be thinking about it to bury you. That's certainly not in 2026, whatever year it is, the purpose of life insurance anymore.
Absolutely. So, you know, all of these are very good questions. It really pays to take a look at your entire portfolio, everything in it, where your money's going, to prepare yourself for a very comfortable retirement for however many years you live. So if now's the time for you to get serious about your financial planning and your future, please give us a call, 978-531-8108. That's 978-531-8108. Or visit us on the web at www.freedmanfinancial.com. That's Freedman.
2 E's and a D.
Financial.com. You can also sign up for our weekly newsletter. Comes out at 10:30 every Friday morning. And we've been doing this since 2009, so it's been a long time. If you go to our website, scroll down on any page, put in your email address, and click sign up for the newsletter, you will be added to our newsletter list. So that will do it for us today. Hopefully that was some valuable information for you, and have a wonderful week ahead. Enjoy.
See you all soon.
Bye-bye.
During today's episode of Dollars and Cents with Freedman Financial, your host may have discussed specific financial planning and investment ideas that are for general information only and not intended to provide specific advice or recommendations. Please remember that investing involves risk and may include loss of principal. Always consult a certified financial planner professional, qualified attorney, or tax advisor prior to investing to determine what is appropriate for you. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA, SIPC.